guys, welcome back to the channel. In this video I'll show you how I got this buy setup step by step. Let's get into it. So now I'll start from my higher time frame, which is the daily time frame. Now looking at this, you notice that the market was consolidating for a while. Can you see? And it was consolidating for about 8 months. If you check, this is from June 2025 up till January 2026. So now all I'm trying to say is how I got this set up. Now remember, beginner traders are being told not to trade when the market is consolidating, but you're going to miss a whole lot of entries if you don't learn how to find or take chances when the market is consolidating. So you can't see the market dropping from a resistance and you look to buy. No, it doesn't work that way. So now the same thing, you can't see a market going up from demand and you want to sell. So it doesn't work that way. So I got this buy setup when I noticed that this market, because this is the daily time frame, and this was the last structure here. This is a break of structure to the downside, because a candle close below a lower low confirms a break of structure. Now also a candle close above the last lower high signifies what? A change in character, change of character. So that means the market has shifted from downtrend to uptrend. So this is change of character for me. This is where I observed that okay, this market has changed character. And for this market to have shifted, and look at the candle, look at this trend, read this trend. This trend was very massive. From here, the candle closed with little wick. So the same thing when the market traded very strongly again, it retraced a bit. Of course, the market would have to retrace after trading. That's the rule of the market. You know, it corrects after an impulse. So going to the lower time frame. So and during that impulse is where you look to take your trade, you take your setup. Okay, so now look, during that impulse, this is a little candle that formed a breakaway gap because the third candle expanded so much. So we are going to be using this candle here to look for a setup. Okay, to look for a setup. And before looking for a setup, we need to wait for the market to pull back into it. So and we're not seeing it clearly. I should have just rushed to the 1 hour time frame, but let me just take it slowly so you understand every setup. And I'm on the 2 hours time frame right now. As you can see, these candles have much more strength than these previous candles here. So the momentum started from somewhere around here. So now look, on the 1 hour time frame, this is what I got. I got this. This is a rally, a drop, and a rally, right? So now market is coming back to retest this rally. This is the whole demand scenario, like something like this. Market came back to retest here like this. This is what the market came back to do. So now I marked this zone, of course, because this is the last bearish candle before this large move here. So I'm looking to take the trade from here. Although I'm not, that's why limit orders are not the best to use when trading. Is you are expected to wait for confirmation before you take a trade. Okay, because if you go and use limit order around this place, the market might come and take you out and start and come to this level. But the market only came here, and here was efficient for it. So now, plus look at the strength of the candles that form. So it shows that the momentum started from here, not even around this place. So the market came back here. So now the market was making a higher lower low break of structure to the downside. And when the market got to the demand, let's move to 30 minutes time frame. Let's see what happened. So now the market broke structure. This is a break of structure and tapped into the demand and rejected. Look at the week. Look at the rejection. The rejection was very strong. That's to show you that this demand level is what is very strong too. So the market rejected from the demand zone, forming a pin bar pattern of candle. So now I want you to take note of something. When a market traded and broke structure, this is to show you that we are in a downtrend, right? And for this downtrend to be invalidated, we needed to break a what? A lower high. That's the last lower high that led to the break of the structure. And this is that last lower high. So let me mark it now as the and remember, if you know my rule, if you know Big Dream FXG rule, I don't trade break of structure with weeks, especially if I'm looking at it on a particular time frame. If I'm looking at this week now, I will not take it as break of structure. I will take a candle break above the zone as a break of structure. That is how I take my trades. So now, what else do you observe again? We broke structure and we closed above it. So our market retested this level. So why didn't market broke structure and retest this break of structure level? That is something like this. Market broke this structure here, and when coming back, retest here and kept moving up. So why didn't market do that? Because of there is this liquidity low that is around here. That is the low that led to the last lower high. This is not the lower high, it's just an internal structure high that led to the break of structure. So we have the protected lower high, and this is the liquidity lower high here. So, and that's where market retested. Take note of that lower high. If you watch my previous video, the same thing, when I was explaining our sell setup, I showed you that same lower high. So you can go on my next previous video, you will understand this pattern. So that's where the entry took place from. So the entry took place from there. And not only that, it's always good if you stick to the last video. So of course, our external range liquidity is here. This is where we're taking our profit from, the external range liquidity. So you can take your profit from there if you want. That is, if you want, but you are advised, if you want to take your profit, to always take your profit at the first liquidity level, which is here. Then you can move your market to maybe break even or take partials, then and continue taking partials until you get to your last day profit. But when you get here and also see that the market continue moving up, it's your luck, right, to catch the trade up to this level, right? So, but the main important thing I want to explain, I want you to get right as a trader, is we have already talked about the price action. Now let's talk about the time when this trade took place. This trade took place in London session. Yes. Why? Because we are trading Euro USD. And Euro USD has more liquidity during London session and New York session. You cannot be trading Euro USD during Asian session. That's wrong. It's pretty wrong to do so. So now we have our London session. Look at when this trade has tested this level. Was He started testing the level and rejecting, came back to test the level again during London session. That's 7 o'clock. Look at it. So take the trade during London session, because this is Euro USD. Plus, before you take your trade, you have to sweep Asian highs, which is literally what happened. We swept the Asian high. This was Asian session here. So this was Asian low, and this was the Asian high. So we swept Asian high. We swept Asian highs. There's this high. Then we swept it. Came back to tap to tap the liquidity low here. So that is how we got this setup that gave us 8.41 RR if you take it up to this resistance. But the main RR, if you keep it here, is 4.74. This is almost 5 RR. So you are in for a lot of money if you leverage this on your MT5. So that is it. How I spot entries on the market. Very simple. So that is it for this video. If you found this video helpful, like it, subscribe, and I'll see you on the next one.